Hello, everyone. Good afternoon, and thank you for joining us on this all important webinar being organized by Stanbic IBTC Insurance. We are so happy that you guys are here, and we can't wait to share all the juicy details we have for you today. My name is Jane Ogoye, and I am the founder of Fab Mom NG. Fab Mom NG is a parenting and lifestyle platform for parents and mothers in Nigeria and in the world. And on my platform, I share tips that help us make parenting a little less stressful. And also, I am big on education. This is why I'm also excited that Stanbic IBTC Insurance has put this together. I'm a mother of triplets. I am married and I live in Lagos. And I'm so excited and I can't wait for us to start. Thank you to everyone who has joined us so far. We can see your messages. So please invite your friends, any parents you know, any guardian you know, anyone who should be on this webinar. Please invite them to join us because we are going to be discussing something that all of us should be interested in. And our topic is future-proofing your superheroes and how education endowment can save your child's future, how you can secure your child's future by getting them started on an education endowment, of course, by Stanbic IBTC Insurance. And I can see some questions already coming in. You guys just hold on. Before we start and before I invite our guests, I have a question. In Nigeria, as a parent, how much do you think it would typically cost to see your child through school? I mean, from kindergarten, nursery, primary to secondary school. How much do you think that will cost if you were to put a cost to all of that? How much do you think it will cost for you to see your child through school from kindergarten to primary school down to the university? How much do you think it would cost to do all of that? Can anyone help us here? Anyone? How much do you think it will cost? Please drop your answers in the comment box so that I can trace them and then we can just discuss and just get started. How much do you think it will cost? For those of you with little children, maybe they are still in kindergarten, how much do you think it will cost? Somebody is saying 15 million. Okay, 15 million. Okay, let me see more answers. 15 million. Someone is saying 40 million. Okay, that's some big money. How much do you think it will cost? Someone saying 20 million naira. Okay. How much? How much? Have you ever sat down as a parent to do that calculation? Like, how much will it cost me? Any more answers? Anyone? Someone says 20 million. Okay, so one thing I'm seeing, all the figures are in millions. So this means that education is a big deal and is a project, and we can't just wake up and just enroll our kids in school without planning. So we need to plan. Someone is saying 3 million. Okay, interesting. We've seen 20 million, we've seen 10 million, we've seen 3 million. Please keep the answers coming while I invite our guests. 67 million or more. Keep the answers coming while I invite our guest speakers for today. So today we'll be speaking with Mr. Abdulmujid Daramola, who is the head of products at Stanbic IBTC Insurance. Mr. Daramola, are you here? Good afternoon.
Yes, good afternoon, Jane. I'm here and
Good
I'm happy to
afternoon.
be here. Good afternoon.
Okay,
You can see
how's your day
wonderful
been?
figures here. The day has been fine, has been fine. What about yours?
Very well, thank you. Have you been seeing the figures they've been dropping? 67, 30 million, 10
Yes,
million.
66 million, 9 million, 50 million. These are the average people.
Someone says it's up to 50 million, depending on the institution. I quite agree. Okay, so let me invite our next speaker. We also have Olufumilayo Ogumbi. She's the head of technical at Stanbic IBTC Insurance. Fumi, are you here? Good afternoon.
Yes, I'm here, Jane. Good afternoon. How are you doing?
Very well, thank you. How's your day been? Because the day has not
The
ended.
day has been really good. Thank you, Jane.
Okay. Did you hear the question I threw out? I was asking people
Yes.
how much they think it would cost.
Mhm.
Someone is saying 35 million. Okay. Fumi, how much do you think it will cost?
Very interesting answers that have been coming in, really. And it's so interesting that is at this time of the year
Yes.
that we're having this seminar,
Yeah.
which is September.
Yeah.
September happened to be the beginning of session for all the schools, and this
Yeah.
is the time that the bills will start coming in
Oh
as
yes.
regards the tuition fee. And it's important that we have an estimate as to what it will cost. And I've been seeing the answers rolling in. We've seen different comments around 20 million,
Mm-hmm.
5 million, 6 million, and the rest.
Mm-hmm.
So for me, I think the cost of schooling or the cost of sponsoring a child from kindergarten to university actually vary.
Yes.
Just like one of the attendees actually mentioned, it varies based on your choice, the choice of the parent, the school itself, and also the location of the school. So all these three factors are to be considered and also impact what the cost will be. When we look at a kindergarten or primary school or nursery school students, I think it varies depending on what you call affordability, what you relatively, you can say 50,000 is affordable to you, and
Mm-hmm.
some can say 50,000 is not is expensive.
That's
So I've
true.
seen, I think I've seen between 50,000 to 500,000 for kindergarten and nursery school.
Hmm.
And the same thing applies to primary and secondary school. For
Okay.
primary and secondary school, there is a range actually. And don't forget that for primary and secondary school is a government funded, we have a government funded institutions that are relatively cheap
Yeah.
with no expense. And however, we also have a private institutions that can range up to like 2 million and thereabout.
Okay.
And also this depend on what you think is affordable to you. The same thing applies to university education. We have public university, we also have private university. It now depends on what you want to, where you want to send your child to actually.
Mhm.
So I recall that myself and a friend had this discussion a while ago, and my friend was actually considering the child, his son was her son was in primary school, trying to round up primary school, and she was trying to put an estimate as to what she can put in place to budget for the university.
Yeah.
And what she came up with then was 10 million.
Hmm.
So, and I've seen 20 million because our projection was she wanted to send her child to a university, but we all know what
Oh
university,
yes.
private university
Oh
now. It
yes.
can range as much as 5 million. So it depends on your preference and the location.
Yeah.
Thank you, Jane.
I quite agree with you. Daramola, do you share her thoughts as well?
Yes, I do. I do share a thought in terms of the monetary cost. And education also comes up with some other costs. Costs like your time, and some other things that could even come in if you don't go for those education. Some people will even say that if you think education is expensive, try the other side. That is also a
Mm-hmm.
cost. I'm sure a lot of
Mm-hmm.
parents wouldn't want their child or their children to be on that other side of the implication of a cost. Hence, the fact that you need to spend to get the
Yes.
best within your means.
I agree. I agree. For me, I just think it's a plan. It requires a lot of long-term planning. You don't just wake up, enroll your child in a school and just go to sleep. You need to plan. What's that kind of future you envisage for your child? You need to plan from the first day your child starts school. Somebody put a $10 million Harvard standard. Okay. Thank you guys for that. Some people have joined us. If you have joined us, you've not missed anything because we are just about to start. But I need you to invite your friends. Go ring them up, let them come and join us. If you know any parents, especially with young children, let them come and learn. So please ring them up, let them join us. And then if you have any questions as we go on, please drop them in the question box and then we'll pick them as we start. Okay, so I think I will start with Fumi. I've heard so much about Stanbic IBTC education endowment. Can you tell me more about it and what are the main features?
Okay. Thank you very much, Jane. And it's so interesting to know that you're a mother of triplets. So it's a time that I think it's important that we consider the education of these our future our future heroes that we plan for. So when we talk about Stanbic IBTC Education Endowment Plan, it's a dual benefit policy.
Okay.
What do I mean by a dual benefit policy? It's a policy that affords you the opportunity to save towards this plan, towards this target. You have a plan in mind, you have a target, you have a value that you are looking at. And it also secure that value at the end of the day. So it assures you those dual benefits. So one of the features of the product is that it allows you to save over a considerable period of time. So
Okay.
you determine what tenor you want to save to in terms of the duration
Okay.
and also the benefit that you are looking at. Though we have the minimum duration, which is 5 years,
Okay.
but you decide if you want it more than that particular stated 5 years.
Okay.
And the Stanbic IBTC Education Endowment Policy also have a minimum period, also have a minimum benefit, which is 1 million. And the expectation there is that we don't expect anybody to plan lower than 1 million for their child.
Okay.
So if you are looking at your child is in primary school or in secondary school, you can be considering what benefits or what value you are looking at. You start from a 1 million, you can see the answers that we have gotten so far.
Yeah.
We've seen 1 million, you've seen 5 million, you've seen 60 million. And those are the benefits you have to put in place to assure your child education. So let me give a typical example
Okay.
or that can actually explain the features of this product. One of the example I'm going to give is a friend of mine that approached me sometimes ago for this particular plan. And this friend of mine happened to be working in a construction company. And because he is working in a construction company, his consideration was that his child that was in primary school was going to go to a university, a private university. And the plan was to have a 10 million plan. And he did a 10 million plan. He had a windfall at that point in time. The windfall afforded him the opportunity to pay a single sum, that is a lump sum benefit. He was looking at a 10 million benefit, and because he's in his early 40, so he was asked to pay a 4.7 million. 4.7 million has been the premium, which is a single premium, in order to assure him of that 10 million in 10 years' time. So he picked up that policy. He paid this 4.7 million. And what that means is that at the maturity of the product, that is in 10 years' time, is going to get this 10 million that is assured. Aside from the 10 million that is going to get on this policy, there is what we call a bonus. And the bonus is to ensure that is like a compensation for you starting and finishing the policy with us.
Okay.
That is, for every year you have this policy with us, you also have a compensation of 2% of that value that is assured.
Wow.
That 2% in this particular example I've given is 200,000 for each year.
Wow.
200,000 for the 10 year means a 2 million additional benefit to the 10 million that has been assured.
Okay.
So it means that this, my friend, at the end of the day, is getting a 12 million at the policy maturity. It means whatever the inflation is, the 2 million will also take care of the inflation value. So in all, Stanbic IBTC Education Endowment Plan actually assures all these benefits. It assures you the opportunity to save towards that targeted plan, and also ensures that there is security in place to ensure that whether you are there or not, that benefit or that plan is actualized at the end of the day.
Wow, interesting. You know, when you were talking, what just came to my head was, okay, apart from the money I will get at the end of the tenure, I'll also be having yearly interest accrue. I
Definitely.
mean, that's a big deal. That's a big deal.
Yes.
That's a big deal. And I'm sure, I hope somebody here heard that. As much as 2% of your the total contribution, you get that at the end of every year added. That's a
Yes.
big deal. Thank you so much for that. So guys, please make sure you are paying attention so that you can drop your questions as we go on. Okay, so Daramola, let me just come to you. How does this endowment plan differ from your traditional saving methods for securing your child's education? What's the difference between it and the traditional banking, savings?
Um, Basically, the love for our heroes, we take that to ensure that whatever we can do within the best that we can afford as parents. Some people want to do savings. Some people will say, "Oh, I want this endowment product." If you go the route of saving, whatever you have in your savings account is what to go for the child's education to protect it. For example, if I have 1 million naira in my savings account, and anything happens today, the education of that child will only be 1 million naira. I want to go back to the example used by Fumi, where somebody had a windfall of 4.7 million naira and he paid a single premium, a benefit of 10 million. So imagine if he kept that 4.7 million in a savings account. And we don't likely hearing that in Africa, but let's assume that that happened and the 4.7 million naira is in savings account. They will to the sum of 4.7 million naira. However, with this endowment, if the guy passes on within the 10 years that we're talking about, the endowment assures that 10 million naira benefit for that particular child's education is guaranteed. So it's like a guarantee agreed from the beginning, irrespective of whatever happens, whether death or at maturity. That 10 million naira benefit is there. But for savings, you need to be putting in 1 naira, 2 naira, 3 naira, up to when you get to that point of 10 million naira. So I hear a lot of people say that I can afford this. I can afford to save for my education, the education of my child. No problem. But don't forget that one of the things that is constant in life is that nobody knows when it's going to happen. So you might be looking at yourself to say, as long as I'm alive, I can save up to this. But it's better to also plan that there's a guarantee somewhere that should the eventuality happen, the education endowment will come in to save the day. And you are doing us a favor. You're doing Nigeria a favor. You are doing the society a huge favor. Thank you.
Thank you, Daramola. Thank you. I love one thing you said. For me, I think is the fact that you can actually start the endowment plan and just go to sleep and not just leave anything to chances, rather than just depending on just your traditional savings, especially because in case life happens, you are sure that, I mean, your family is assured, your child's future education will not be stalled. So thank you very much for shedding light on that.
Hello, Jane. I will like to also quickly add to that
Okay.
point from Daramola.
Okay.
So when we look at education endowment policy in comparison with other products, just like you mentioned, one thing differentiates the two products or the options that we have available, which is the security, the life assurance security. Let me give you a typical example of a client I had a while ago. This particular client was in his late 30s, and he picked up this particular policy. And when he picked up this particular policy for his child, and the policy was supposed to pay a 5 million benefit. 6 months down the line, he had an accident on Lagos Ibadan Expressway on his way to Ogbomocho. And suddenly he lost his life. And he had this son that he actually planned for to ensure that that child actually finished his or her that child finished his education, So because his life was cut short at his prime, it doesn't mean that that child's education is going to be cut short. What happened was that 5 million was there and was assured for the mother, because the mother was the beneficiary.
Okay.
And the mother was called upon that, okay, you have this 5 million for the benefit for the education of the child. Aside from the company going to pay, let's say, group life benefit for because of the death of the father, aside from family and friends contributing, that contribution or whatever money is being generated at that point in death cannot assure the child's future, because this child was still very young. But that benefit coming into play actually ensures that that child at that particular point in time can actually, the dream of the father will be actualized. So when we look at this ultimate benefit and compare with other different options of savings that
Yeah.
we have, it cannot be compared.
Yeah.
I'm talking about somebody paying just for 6 months, 90,000 for 6 months, 560,000, and 5 million is paid to the family. So it's not comparable. It's a different option, is a very standard option that actually secure the future and future proof this our future heroes education.
Thank you, Fumi. Thank you, Fumi, so much. Thank you. Some people have joined us. If you're just joining us, please sit down, relax, and ensure that you listen carefully, because we are talking about how an education endowment plan by Stanbic IBTC Insurance can save your child's future and give you peace of mind. So that this September, for instance, imagine you started this year, next year, September, you will just be chilling when everybody is hustling, to get school fees. So please, if you have questions, remember to drop them and we'll take them at the end of the session. Okay, so Daramola, let me ask you, in what way does this endowment plan ensure that the child's future education is secured up to that targeted amount? Because I'm sure a lot of parents will be wondering, am I sure that my child's future will be secured with that targeted maybe 10 million, plan I signed up for? How does this ensure all of this?
So it starts with the parent, you know, it starts with love, affection for your loved ones, your children, the desire to give the best within your financial power. So when you look at that, it simply means that a parent will sit down and say, I have a child who is in primary school. I am trying to ensure that whatever come out of this life, this child must have the best of university education. And the child is probably in JSS. That's 6 years in secondary school, maybe four
Yeah.
years in the university. That's around 10 years. So that is the parent already envisaging about 10 or 11 years. So let's say 10 years, and the parent looks at it and say, "What is the average school fees that can even happen with rush around inflation, exchange rate issues?"
Yes.
And comes up
Yeah.
with, okay, let's say 2 million naira per year average school fees. Not, it might not be ideal in some situation, but I say, like, let's assume 2 million.
Yeah.
That's about 20 million naira worth of target for that child's education. Parent assures that, and it sets it aside as part of the plan, and approaches us to say, guys, I need your Stanbic IBTC endowment plan. I want to set this solution in motion for a benefit of 20 million naira per child, so that in case anything happens tomorrow, I'm sure guys, based on your promise, to ensure that the education of this child is what is guaranteed. So what that means is that this 20 million naira becomes payable at maturity, living benefits should the parent outlive this period. So it shouldn't be like
Okay.
enter my year life insurance about
Okay.
doomsday, doomsday. See,
Okay.
the 20 million naira goes back
Okay.
to the parent for he or
Okay.
she to use and plan for the education, and even pay the, or maybe looking at Ava, like some people have put here on this call.
Mm-hmm.
However, because life can happen, if that happens within this period, the education of that child is still secured to the sum of 20 million. So what that means is that the whole assurance, the whole protection, the whole planning is in the hand of the parent to do that. And for us as a company, we are we are part of a group that is known for being the best. So the promise that we have put out here today to say, if you subscribe to this, if that happens, we pay the amount you have agreed from the beginning, and at maturity, if you leave this, if you have this benefit, that's our value proposition, and we will stand by it any day to ensure that the education that every child that has been subscribed on this solution is guaranteed. Thank you.
Thank you, Daramola. It just brings to mind what happened to me when I was a new mom, when I had my babies. And I remember my husband had this education policy with some bank then. And I know how it came in handy when they had to start school. Because as a mother of three triplets, it meant we were paying school fees at once. So it really did
Mm-hmm.
help cushion the effect, because imagine having to scratch from your savings, but we've been saving for years. So, and that was not even an endowment plan. That was even an educational policy. So, how much more an endowment plan? So, I'm an example, a living example of someone who has enjoyed the benefits, and it did help. It really helped us up until they got into primary one. And so, I know that after speaking with you, Madam Fumi, I told you I will still chat to you personally so that we can talk.
Yes.
I can
Yes.
start
We have
planning
to.
my Harvard standard university.
Yes, definitely.
Okay. Fumi, let me ask you. So, what happens to the targeted amounts at the maturity of the endowment? And how is the maturity calculated and how is it disbursed?
Very interesting question, Jane. And then I think it's important that we actually illustrate that. You know, let me start from the example I gave earlier. Somebody had a plan of 10 million, and the plan of 10 million is for a 10 years period. What it means is that at maturity, this 10 million is going to be paid.
Okay.
Aside from the 10 million being paid, I mentioned that we have a bonus, which is 2% for every year of the policy. So in this particular scenario that I've painted, that 2 million, that 2% means 200,000 for every year of the policy. That is additional 2 million for the 10 years. So the total package that the parent is going to get at maturity will be 12 million, because the targeted value is 10 million and the additional value is now 2 million. Don't forget the example I gave before, what a single premium plan, where my customer decided to pick a single premium,
Okay.
which is a 4.7 million for the plan.
Okay.
However, there are other options of you, if you decide to make it an annual premium, you decide to pay your premium on an annual basis, or
Okay.
you decide to pay your premium on a frequency of monthly premium. All those options are available. But what we are showing you is that aside from the interest that is given to you or that is considered in whatever plan or whatever budget you are looking at, there is a bonus guaranteed as long as you stay on the policy from the beginning to the end. This is also different from the death benefit, which is the security angle, which differentiates the product from any other option that is available that you might be thinking of in order to future-proof this education of our heroes. So those are the options that is the calculation basis,
Okay.
actually. Thank you.
Okay. I can see that some people have joined us. If you're just joining us, we are talking about how we can future proof our superheroes, our lovely children, and how an education endowment can save their future education and ensure that everything goes on smoothly should life happen. So please, if you have questions, please drop them in the comments and we'll take your questions very, very soon. Okay, so Daramola, let me just ask you. So I have listened to all that you guys have said. How can I access information? How can I access support regarding Stanbic's education endowment throughout the policy duration? Or is it that once I just sign up, you guys just leave me?
Jane, this is Stanbic. Eh? Leave him there. The same way you see us around all the social media platform, the Twitters of this world, the YouTube, Facebook, and the rest like that. And we are projecting our solutions. We call our product solutions because we know that the first thing we do in Stanbic is to ensure that we identify customers' need and give them those solutions. So the same way you're seeing us around, the moment you subscribe, is we want to empower you. We want to ensure that you can do things on your own via our self-service channel. We don't want a situation whereby you really have to rely on somebody to get something done, or you need to have to be calling people. So our self-service channels are our website. You can get this product. We have a mobile app that you can also log into. You can get the quotation as to how much you want, how much you can get, the product details, how to pay your premium. They are on the mobile
Okay.
app. You have
Okay.
the client spotter too, which you can also be able to access via the website. There are people that will say, "Oh, technology, technology, technology." And say, "No, I want personal touch. I want to talk to someone. I want to see someone." Okay, if you want to talk to someone, we have our phone number scrolling on the screen now.
Yeah.
01270 Send email to us, ensure at
At
stambicibtc.com.
stambicibtc.com. Is
You
it
could also meet
247
us
support? Is it 247?
247. Once you send, somebody is there to attend to you.
Great.
We do
Great.
at least within a timeline of 1 hour. We are back. We are giving you a response. So
Great.
that's as fast as that. We don't keep our emails just locked up there, or nobody talks to you
Okay.
for the time being, or when you're calling. We'll always give you that attention when it comes to our services. Then apart from that, if you feel that you you want to meet us on our social media channel, we have our social media handlers who will be there to also take your inquiries and also some of your feedback and every other thing that you want. And finally, you want to enter into our branches, you want to have experience, you want to
Okay. So I can
experience and
actually walk into any branch and get started
yes,
as well.
so come and
Okay.
experience the exotic life of a Stanbic IBTC customer wide. And the best of thing
Okay.
is that you do not need to start looking for Stanbic IBTC insurance everywhere. If you see any
Oh,
Stanbic IBTC,
big
whether it's a
big
bank,
bank branch.
the pension, is this, is an
Oh,
insurance, the moment you
great.
enter and you tell them that this is what you want, you are giving a
Priority.
world class priority, and somebody is there attending to you and getting you the required information, clarification that you have sought. And I think I'll just give an example. I was in Abuja,
Okay.
I think about a month ago, and after somebody who just heard about this product, having maybe I don't know where he got the information from,
Oh,
just went to a particular branch in Abuja, and whatever he was asking for, he was able to conclude it. He completed his form,
lovely.
submitted his form, paid his premium vetted, and the document shared to him via his email. He
Okay.
didn't believe that that could happen. He didn't believe that that could happen. Like he was thinking this or something, or maybe somebody will have to come and meet him to conclude that. So we have that. And finally, we also have our representative nationwide who
Okay,
are,
cool.
who are also representing the Stanbic brand. Their
Okay.
staff, their intermediaries, they can talk to you if you have questions. So when you see them around you, just feel free. Well, like you nicely dressed, you
Okay.
smell nice, and
I
nobody
will
will
cut
disturb
you.
you.
I will cut you there because Madam Fumi needs to answer this my next question.
All right.
So my question, Madam Fumi, is are there options to adjust this plan if circumstances change over time? My income gets, bigger or gets lower. Can I walk in and say, okay, I don't want to do 50K again, I want to do 30K. Or I don't want to do 30, I want to do 100. Is it possible?
Definitely, Jane. One thing that is constant in life is change. We have changes, and because we are starting today does not mean that status cannot change tomorrow. And the policy affords that flexibility. It allows that flexibility. You can start with an amount today, and you can decide to change it in 2 years' time. You can have a beneficiary today, you can decide to increase the beneficiary, you can
Okay.
decide to increase the tenure of this particular plan. Just like that Amola mentioned previously, we have customer centric organization. We are very customer obsessed. We are always in your faces, and we are ready to journey with you all the way. So whatever changes you want on the policy, it is allowed.
Okay. Thank you very much. At least now I know that it's not cast in stone.
Definitely, Jane.
Okay. Daramola, before let me just ask you, what is the eligibility criteria that any parent should be aware of? What do I need to own? What do I need to do to ensure that I can sign up for the endowment plan?
For every parent, you are eligible as long as you have a child, you have a ward that you are the guardian, and you are not younger of
Okay.
age, and you're not older than 65 years. So you are
Okay.
eligible, and I think you should take this. It's a good recommendation. Secondly, is that this particular product is so much designed in a way that we've set a minimum benefit to be 1 million that you can choose. And
Okay.
that we're looking at it that why would you plan for a child's education in this era with something less than 1 million naira? Some people even
Yes, it's
tell
not
you that this is the
realistic.
minimum small, but that's the minimum benefit.
Okay.
Then you also find out that we have also set the minimum premium at 10,000 naira. So if you're looking for a 10 benefit, you can get it. If you want a
Okay.
benefit of 1 million naira and above too, you can also
Okay.
get that. Then the duration, uh, you have to ensure that you plan towards your child's education. If you look at our educational system, primary school 6 or 5 years, secondary school 6 or 5 years, university education 4 or 5 years. So we have also
Mhm.
put it there to say the minimum period that you can take this product for, this solution, is for a minimum period of 5 years. So you need to plan for 5 years. And if you love your child, I am not sure that 5 years is too it's too long. So these are some of the eligibility rules that you need to have in place when you
Okay.
want to get the solution.
I can see some questions dropping in. So let me just quickly ask Fumi this. So how do I reach Stanbic IBTC Insurance if I want to get started? How do I,
Okay.
like right now?
Okay, thank you, Jane. So reaching us, you can reach us at through our email insure@stanbicibtc.com, or you call our number 270-6801,
Okay.
or you dial straight to our website www.stanbicibtcinsurance.com. We are all available, and you can also reach us at any of our touch points, our social media platforms. You can just drop your inquiry. We will definitely respond to you.
Okay.
Another thing I also want to add when you talk about eligibility or in terms of requirements on this product is that the product is flexible and it affords you the opportunity to pay based on your own cash flow. You
Okay.
can decide that you want to be making a monthly premium. The policy affords you that opportunity. You can decide that you want to make it an annual premium. The policy affords you that
Oh,
opportunity.
okay.
And you can have a windfall, like you have a bonus within
Mm-hmm,
the year,
mm-hmm.
or you have something
Yeah.
big that came up for you. You can decide to lock that payment in, to lock that premium in for the future of your child. So it's all in all, it's just future proofing this child education, to say at any point in time, whatever happens, whether I'm there or not, the child education is assured.
Okay. Okay. So, guys, please drop your questions. It's time. The floor is open. Please drop your questions so that our experts here can do justice to your question. I see a question by Imosemi, and he's asking, what is the starting amount? Madam Fumi, I'm sure he wants to know how much he needs to have, or what's the least amount he needs to have to get started on the endowment fund.
Thank you very much for that question. So the starting amount, the minimum premium for this plan is 10,000 naira.
Mm,
So if you have a 10,000 naira, you can decide to pay it on a monthly basis.
okay.
So that is the minimum premium that is required to start this plan. And the minimum sum assured in terms of the benefit that you can actually budget for is 1 million naira.
Okay.
You can range it from that. When we started, we asked some questions, and some people posted that is 65 million, is 20 million, whatever the value you are targeting. So you determine what you are looking at, and we determine what premium you are going to pay. But the minimum premium for the plan is 10,000 naira, and the minimum sum assured is 1 million naira.
Okay. There's another question here from BC. She's asking, do I need to have a Stanbic IBTC account?
That's not compulsory, Jane. So as long as you are interested in this product, just drop your details with us, reach out to us and any of our touch points. We're going to engage you and you can start the policy. You don't need to have a Stanbic IBTC account before you can start the policy. But if you have a Stanbic IBTC account, it's also good, but it's not a prerequisite or a requirement for you to start the policy.
Okay. Someone here is asking, with the above analysis, can I be doing like 100K every month? And what are the benefits of these products? I think she wants to sign up for 100,000 naira every month.
Yes, per what I could see from that person's question, he had done a kind of analysis of the child school fees to be about 1.2 million naira per year. So the first thing I will tell the person is that, what are you planning for? Is the child in nursery school? Is the child in primary school?
Yeah.
And you are targeting that you want to plan towards the child's education in maybe university or secondary school. But peradventure you are planning for secondary school, which is going to be maybe in the next 5 years, you could actually do that 100K on a monthly basis for the next 5 years. As long as you're alive, you know that you have already accumulated a sum of money to prepare you for the next stage of the child's education. And peradventure, anything happens, you find out that this benefit that you 100,000 naira will be able to buy would also be able to sustain that child education. So yes is the answer.
Okay. Pat is asking that he has 3 children, that does he need to do the plan individually for each child because each child is in a different class, or he has to do it collectively? The kids are of different ages, so does he do like a collective endowment plan, or he does it individually?
So it's a matter of choice. You know, some people will say, I want to have an individual plan for my children. So you take one per child. Now those estimate by those children because certainly except they are triplets and they're in the same class. But if they are not triplets and they're in different classes, that means different estimate we have to have so you can take them individually. And some parents will just say, I will bring out or bring together this estimate as one. Take one policy, but they will apportion a certain percentage to
Percentages. Okay.
each child, probably 50-50, depending on number of children that he or she has on that list. So it's possible. It depends on the parent.
Okay.
We are
Someone is
giving them freedom. Oh, it's freedom.
someone is asking one of the questions you answered earlier, Chibuki. She says, "What happens if I outlive the 5 years?"
Okay, so let me pick on that. So if you have a plan of five
Mm,
years and you are able to live to the maturity of the 5 years plan, aside from the fact that this policy affords you the opportunity to save, there is also an interest element that is also considered in whatever you are saving. Like the example I gave previously,
mm,
let's say you are targeting a 5 million benefits, a 5 million benefit for a 5 year tenure. Depending on your age, you can pay as low as 90,000 on a monthly basis.
okay.
And by the by the end of the 5 years, you are going to have these 5 years, well, this 5 million benefit that has been agreed at the inception of the contract.
Okay.
Aside from the aside from the 5 million, you also have a benefit, a bonus that
Yeah.
is 2% of that value that
Okay.
is calculated on a yearly basis
Okay.
that will be added to whatever you have contributed. In this case, will be 500,000. So that 500,000 will be a top up to whatever you are collecting. So you are collecting your 5 million. You're also collecting an additional benefit that which is the bonus to that targeted value.
Okay.
So if you outlive the 5 years, which is what we prayed
Of
for,
course.
you have that value to actually ensure that your child go to that school
Cool.
that you plan for.
Okay. Great.
And aside from that, you also have a bonus because you live from the beginning to the end. You start the policy and you're able to end the policy.
What
So
if
you also have a
what if I
bonus that
terminate
is
it at some point? What happens?
so when you terminate it at some point, you are definitely not going to earn that bonus that is
Mm,
paid at the end of the
mm,
policy period. And because it depends on, because you are terminating before the end of the policy term, the interest element that is also considered in the policy will also be impaired
okay.
because, all these things were planned in the
Yeah.
policy. And that is why at the end of the day, if you look at what you are going to be contributing for the future benefits, most time is lower than what you intend to get.
Okay.
So that particular interest will be impaired if you terminate before the end of the policy plan.
Okay, great. So Tosin Shobowale says, are the interest rates fixed from the get-go? She's answered the question. She's asked, you've just answered the next question she asked. She asked, what are the implications if one wishes to terminate? But her question is, are the interest rates fixed from the get-go?
Definitely, definitely. Let me use the example I also used in the course of my presentation, which was my friend that picked up a 10 years plan for and with a single premium. He decided to pay a 4.7 million for a 10 million cover because the interest rate has been fixed into the policy. He's paying 4.7 million now to get a 10 million in 10 years time. So what that means is that that interest is already part of the plan.
Okay.
So if it's already embedded in the policy and it's fixed with the policy as you are being costed, as the premium is being costed at the point of onboarding, what you are going to get at the end of the policy is already determined. And what you expect to contribute to get that benefit is also determined. So the interest rate is embedded in the policy plan.
Okay. Another question, Darmol, I think you should take this. It says, how easy is it to process the death benefits? How easy is this?
So it's very easy. But before I take on that, I also want to encourage our listeners that what should be paramount on your mind when you taking this particular solution, love of your children, not even the investment aspect that you're looking at. Just look at the children and be asking yourself this critical question: what happens if I'm no longer alive? Rather than being fixated on the return that is coming with it. So, with respect to the debt claim that we're talking about now, it's very easy. You can notify us of a debt claim via our website, via any of our touch point, and we will get in touch with the next of kin. With the when it's time for claim, we ensure that we do not tell you how the leopard grow is a skin or whatever. We don't tell you stories. So when you notify us, we tell you immediately the required documentation that you need. Of course, now you cannot come to me and say somebody has died. I will need to
Yeah.
ask you to say, please prove to me that the person has
Proof.
passed
Yeah.
on. And
Yeah.
that process is very, very similar. Once you can provide this documentation, within
Okay.
24 hours, the amount is credited to the
This process.
beneficiary's
Okay, great.
account and it's used to
Okay, great.
settle the education. In fact, that will also be a very, very good selling point for us because we have
Okay.
scored a lot of points on that in the
Okay.
industry.
Can I switch the plan from one child to another? If I open for one child, can I use the funds to pay for another child? Rock Calvary is asking. Can she switch the plan from one child to another?
So what you're talking about is change. So
Yes.
I will not say you should switch from one child to the other. Plan for the two children because I'm sure you know that the one child needs education, the other one needs education. However, if you need to change your beneficiary from one particular child to the other, you are allowed because at the end of the day, whenever the benefit is payable upon death, it is the children that you have listed that
Okay.
will
I
benefit
really
from it.
love the flexibility. I must
Yes.
applaud you guys. I love the flexibility. So we have a chat box here. I know that so many of you I can't wait to get started and you still have questions. Please, sign up, click on the chat box, fill in your details, and somebody from Stanbic IBTC Insurance will reach out to you and you can continue the conversation from there. But in the meantime, please drop your questions. We'll take as many as we can. Um, Ayodeji says, my child is going to secondary school, and when I calculate it, her fees is about 300K yearly. How do I go about the percentage?
Okay, let me take that, Jane. So, thank you, Ayodele, for your question. So, if you look at the estimates, currently you are saying you are paying a 300,000 on an annual basis for your secondary school child. So, what is your aspiration? What university are you considering for your child? Will you want your child to travel out for the university education? Because that's you have to decide. Or you want your child to go to a private university, and what type of private university are you looking at? What is the location? And when you have all those factors considered, you're able to come up with a value to say, now I'm paying 300,000 on an annual basis, and for the future, or for my child to be able to go to this university, I have to ensure that I have a budget of 20 million, or I have a budget of 5 million, depending on your preference. So when you are able to come up with that value, then we have a starting point, which is the value that we are looking at estimating for. So with this value, we're able to come up with what are you going to be paying on a monthly basis with the interest that is guaranteed, that is added to the policy. We are able to journey with you to ensure that you achieve this value. Thank you.
Okay, Real One, thank you, Ma. Real One says, good offering, but I'd like to ask, what's the minimum and the maximum age at entry to the policy? I'm sure he means the age of the parents.
Yes, thank you. I think Damola mentioned this in the course of his own presentation as well, where he said every parent is eligible because the minimum age is age 18 and the maximum age is age 60. That is, as long as you are above age 18, you can actually take up this policy. So, and this policy is available for you. As long as you are younger than age 60, you can take up this policy. And also, I would just need to add that this policy can also be used as a gift. Somebody
Okay.
has given birth to a child and you want to give something to that child. You can actually buy a Stanbic IBTC education endowment policy as a gift for that mother. And what it means is that I am securing the future, the education of your child to this particular age. I am securing the education, the university education of your child, or the secondary education of your child, or the primary education of your child. So it's so interesting that this particular policy can also be used as a gift, and it can also be taken by someone that has not given birth, an intending parent. So you have planned that you're going to give birth at a particular point in time, or you are going to start having children at a particular point in time. You can start the planning now. Everything has to do with planning.
Yes,
So,
no.
is a financial tool
Yes,
that allow
no.
you to plan towards that future aspiration, towards that ambition, to ensure that is actualized.
Okay. We have one other question. Someone says, how can I plan for my unborn child? Just walk into any Stanbic branch, right? Or they can
So,
call you guys on
yeah,
the
for me, I
number,
just
send you
mentioned
an
it.
email.
You
Yes.
can plan for the unplanned child, and because the child has not come, so you can take it and ensure that the father probably is going to be the name beneficiary. And when the child comes, you replace the father or the mother by carrying out a
Mhm.
change of a beneficiary with that particular unborn child. It's also very important to state here that product you are taking it in the name of the parent, not the name
Okay.
of the child or the children.
Okay.
Why? Because
Okay.
the risk or whatever is going to happen is contingent on the life of the parent, not on the life
Okay.
of the child. So the product and the solution will always be in the name of the parent.
Of the parents. Thank you, Daramola. Thank you, Fumi. I'm sure people will still want to, contact you guys, if they have other information, they need more information, they need clarity. You can always email insure@stanbicibtc.com or call them on the numbers they're scrolling there. We also have a chat box. So please fill in your details and a team from Stanbic IBTC Insurance will reach out to you to get you started. Any last words, any final words for me and Daramola? Any final words before we call it a day?
So there's this balance, that we use when we say Zulu, so that something will not happen to you. So in this case, I would say enroll for this solution, no, so that you don't put your children in a bad position in future. You don't make them to serve other people. And finally, you just say buy this product so that you don't look back and see your children hawking pure water in Lagos traffic. Thank you.
For me, any words?
Thank you, Jane. So I would like to start by this. You know, these children did not came to life because we brought them to this world. And because we have brought them to this world, it's important that we ensure that we plan for them and give them all that is required for them to succeed. And that includes ensuring that we secure their future, we secure their education. If we say we love our children, it's important that we have a plan that can actually future-proof their education. Because at the end of the day, for these children to make us proud, for them to make this nation proud, they need this education to thrive. So it's important that we have in place a plan that ensures that our aspiration for our children is secured. Thank you, Jane.
Thank you, Fumi. Thank you, Daramola. Thank you, Stanbic IBTC Insurance, for putting together this amazing product. If there's anything I'm taking away from today, is the fact that I should not leave anything to chance. I should begin to plan towards the triplets education, university education. Madam
Yes,
Fumi, we are going to rub minds after this
yes,
webinar.
definitely, Jane.
I also love that it's very flexible. It's not cast in stone. So as my income increases or God forbid decreases, I can always come and increase it or reduce it. And then if I have a windfall, I can just throw in that lump sum. I also love the
Mhm.
fact that even if by God's grace a parent outlives the years, you can always get the funds back, or if you want to continue, you can always elongate it and all of that. I also love the fact that the minimum years you can put in is 5 years, and you can start with as little as 10,000 naira and as much as 1 million, but your plan must not be less than 1 million naira. I tried, Abby.
Definitely, Jane. You did well.
Okay. Thank you so much, everybody. If you have more questions, please reach out to Stanbic IBTC Insurance on any of their platforms. You can reach out to them via the chat box, drop your details and they'll reach out to you. You can also send them an email, and you can always catch the replay here on YouTube. It's on Facebook, I think Twitter, LinkedIn, and I think Instagram. Thank you, everybody. Thank you, Daramola. Thank you, Fumi. And of course, thank you, Stanbic IBTC Insurance, for putting this together. I'm really grateful. And thank you to everybody who's joined us. And don't forget that you need to begin to save for your child's future from today. God forbid, it's not a plan. It cannot happen. It's not a plan. Thank you so much, guys. Thank you.
Thank you,
Thank
Jane.
you, Jane. Thank
Bye.
you all.
Thank you, everyone. Bye.
Bye.